Hello everyone, welcome to a product review at Phenomenal. In this video, we're going to review Kotak GEM, which is Global Emerging Markets Overseas Equity Fund. This fund primarily invests in a lot of emerging market companies, and it gives you exposure to the emerging market, right? As the name says, it charges a very high expense ratio of 1.42%. So now it's fair to compare this fund against another emerging market index, right? Which is, we are choosing our own index here, which gives you exposure to all the emerging markets in the world. Comparing this fund to its benchmark, we see a very disappointing story. It has brutally underperformed its benchmark since its inception, and only in a few years it has showed some outperformance, which is, you can see the outperformance consistency. So out of 14 years it has outperformed just in 5 years, and it's charging, again remember, a very high expense ratio of 1.42%. Now it is called Global Emerging Markets, so you expect it to have emerging markets, right? So let's see whether it has exposure to, let's say, China, Taiwan, and all famous emerging markets, right? So we do have highest exposure to the Chinese market, followed by Taiwan market, Korea, India. Now comes a big question here. So if you see, you have United Kingdom, you have United States, you have Canada. These are all not emerging markets, right? These are all developed markets. So why are these funds, that is, why are these countries, why do you have exposure to these countries, right? So that gets us to the next part, which is, I just analyze their underlying holding, because it's a fund of fund, right? So it's holding a Canadian fund, which is CI Emerging Markets Fund. So what you see in the fund overview answers the question why it invests in developed markets as well. So it says the fund primarily invests in equity and equity related securities of companies located in emerging markets and emerging industries of any market. So this is almost like a global fund, right, which can technically invest in any market, even if it wants to invest in the US market, but wants to focus heavily on the emerging markets, and they themselves classify it as an emerging market fund. Now that we know that this fund gives you exposure to the emerging markets and also to developed markets, it has underperformed its benchmark and charges a very high expense ratio. We want to know, are there any other alternatives in India, or cheaper alternatives, right? Because it's a very highly charged product. We will now move on to the fee reduction. So you can see there are few products which again gives you just emerging market exposure, right? I'm hoping it's just emerging market here. We will analyze it in a bit, but it's much lower fees, except this one, which is again much higher than the Kotak Emerging Market Fund itself. So we'll just compare this fund with HSBC Global Emerging Market Fund to see how well this HSBC fund has performed. So the HSBC sort of underperformed, but it's been in line with the Kotak Emerging Market Fund, and it's charging a very, again, for a fund, an active fund in India, compared to this fund it's lower, but still on the higher end. If we quickly look at whether it has exposure to developed markets, and it does actually. So United Kingdom, you can see, United States, Canada, again, I think it's kind of sort of similar funds, but with lower fees here. Now we know that this fund is charging a very high expense ratio and it has underperformed its benchmark. How about just looking into the benchmark itself? Is there an investable product out there that you can buy, that you can look into? Because the benchmark itself has outperformed, right? So what we are looking at is a simple benchmark from iShares. Again, India doesn't have a lot of products giving you passive exposure to all the emerging markets, right? So we are going out of India to the US market. So there is EEM, which is the ticker. It charges a very low expense ratio of 0.72%. Sorry, I should correct myself. 0.72% for a for passive product is still on the higher end, but it is much lower than this product, and it has outperformed the Kotak Emerging Market Overseas Equity Fund of Fund. But can we reduce the fund, that is the fund's expense ratio, even further? That is reducing the expense ratio of EEM.US, right? So we will take this fund to Fund Analyzer again and see whether there are any other cheaper alternatives, so that we can buy the lowest expense ratio product out there, so that in the long term you would save on fees. Eventually it's going to contribute to your overall returns over long term. So I'll again go to the fee reduction part. What do we see here? So this fund is charging 0.72%. You have ESG aware MSCI EM ETF, not the same, right, because it's ESG focused but on emerging market index. This is interesting. So you have the same fund from iShares, literally the same fund, but this one is 0.72% and this one is 0.09%. So let's take this and analyze it, comparing it to the Kotak and iShares, the higher expense ratio one, with this 0.09%, which is crazy, right? Just a fraction of the cost. No wonder here that a low expense ratio product has outperformed. Pretty much it's the same product, right? But one is charging 0.72%, other one is charging 0.09%, right? So there you go. So I've shown you the alternatives that you can look into. What we have seen in this video is a very heavily priced international mutual fund from Kotak, which from the name it says it gives you exposure to the global emerging markets. But when you look into the exposures, you can see exposures to the developed markets as well. And the reason behind that is, like, the fund itself, its holding says that it can invest in emerging industries in any country. And I've also showed you that there are other alternatives with much lower expense ratio if you go outside India and look into the US market, right? So that's it for this video. Thanks a lot for watching, and I'll see you next time with another interesting fund. Thank you.